When you work with your clients, what are some of the biggest ways where you see personal finances overlap with business finances?
Someone doesn't have good habits on their good personal financial, they could really drain their business. Awareness is number one in personal finance. Awareness is number one in business finance. We're not two different people. Who we are in the business, who we are in personal, overlap.
Let's stick to the budget for a second because I believe a lot of people talk about the 50-30-20 budget, right?
A lot of people can't control themselves, so they put literally different envelopes for different things. It sounds elementary, but it works for a lot of people. Put envelopes every time you have a paycheck, every time you have money coming in from your business or a paycheck, to what expenses you want to put it on.
I think that's great advice. I think one challenge a lot of people have psychologically is if you start saving money and you get good at saving, then all of a sudden your bank account starts rising. What do you recommend in terms of an emergency fund size? I know some people talk about 3 months worth of expenses. Some people say 6 months, 3 to 6
3
months.
to 6 months, and to start saving when you're young.
On in terms of credit scores, tell us what can people do to improve their credit scores?
Number one, awareness. First of all, you have to have awareness of why your credit scores and why. Start paying down your credit cards. Start watching it, checking what is driving it.
Where are people leaving money on the table when it comes to taxes?
If you work for yourself or you have income that they don't pull out taxes, put aside money every paycheck, every month for taxes. Because if not, you get a huge tax bill at the end of the year and the money is gone. In order also to save money on taxes, a lot of the things you have to do before the year ends.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. My guest today is Ahuva Gruen. Ahuva is a returning guest. She was our guest in episode 122. Ahuva is a fractional CFO and she works with small and medium-sized businesses to improve their bottom line. Ahuva, welcome back to the show.
So nice to be back, and I'm so happy to share on today's topic.
Sounds good. The first time we met, we focused on small businesses and business finances. Today, we're going to talk about personal finances and family finances. So tell us a little bit more as a brief introduction, Ahuva. When you work with your clients, what are some of the biggest ways where you see personal finances overlap with business finances? Let's start there, and then we'll move fully into the personal side.
So it's a great topic because when I was a CFO, I ended up helping family and friends and neighbors and colleagues and coworkers and different professionals that I dealt with their financials in their business and in their personal. And that's what led me into becoming a fractional CFO. And what I see is that if someone doesn't have good habits on their good personal financial, they could really drain their business, because if they're taking out too much money from their business because they're personal, they could drain their business financially and really make their business going under. Like I say, in a business, we want to be able to milk the cow for years to come, to take home money for your families, take home money to live on, or whatever your goals are. But you don't want to have a huge barbecue. And another thing is, if you mix personal and business financial, it's not good. You don't have clarity what's going on in personal. You don't have clarity what's going on in business. It's going on how much your business is overhead, how much you're taking home. A lot of times I see that I'm not taking anything home, but really they're spending so much personal stuff running through their business, they don't even have an idea. And they don't have an idea they don't have clarity about their business. And as I say, awareness is number one. Awareness is number one in personal finance. Awareness is number one in business finance. Before you could do anything, you have to have awareness of what is going on. Where are you spending your money? Where's your money coming in, your revenue or your personal, what you're bringing home? And if you're mixing up the finances, how could you have awareness in your business financials to really grow and succeed in order to be able to take home more money, and in your personal? And if you pull out too much money, then also you're really running your business dry.
So it sounds like the bottom line should be, if you have a business, the point of the business is so that it keeps growing and it serves you for years, maybe decades to come. If you take too much money out of your business because you have a lot of personal habits and personal luxuries you want to finance, you're actually hurting both. You're hurting your business's future, and by that, you're actually also hurting your own personal financial future as well.
Right. Another point is, if you don't know, if you don't have good spending habits and good financial habits in your personal, you'll need so much more money from the business, or you don't know what you need from your business. And then you could also run up credit card debt, and then you're like taking out a business loan and you're putting it for your personal, or vice versa. It makes people can't sleep at night, and then they can't function at home in their personal. They can't function in their business. They're panicking. It's really, we're not two different people. Who we are in the business, who we are in personal, overlap.
Do you ever see that situation happening where somebody is in a business and they're really on top of it and they're really strict with the budgeting, they're really managing the business well, but then when they take their money home, the personal finances are a bit of a mess? Do you see that dichotomy, or is it kind of in parallel and lining up most of the time?
It's usually lining up most of the time, unless there's other people involved that they have to answer to.
So let's bring it back to the personal side. You mentioned awareness. Maybe tell us more, like, what does awareness mean to you?
Awareness means to me to knowing what money is coming in, what's going out, what do cost things, what is all the little times. I did a personal, one of my clients is personal finance. My wife doesn't spend so much on, it could be the husband, on meals and entertainment, on buying out food, on clothing. You don't realize how much everything adds up. All those little expenses add up. How many times, just the other day, I got an email from Ahuva Security that they wanted to charge $700. I never signed up for that. If I didn't have any awareness of financials, of what's coming out of my bank account, it would have fallen through the cracks. It came free with the computer, with the laptop, and after a few years, they want to charge you $700. But if I didn't have an idea of what's coming in, what's going out, how would I know? All of a sudden, a huge credit card bill, and and if you don't know what's going on and not be able to pay it, you could get interest so fast. You get a new credit card, it's really interest free for how long? What's the interest afterwards? What are things costing you? If you put it on credit card and you have to pay credit card interest, it's not costing you that amount. It's costing you more money. It's all over, like budget, like what's your taxes going to be? How much money you...
Let's stick to the budget for a second, because I believe a lot of people talk about the 50-30-20 budget, right? 50% needs, 30% wants, 20% savings, right, investment.
So I'll expand on that. There's different ways to take control of your finances. Once you know what awareness is, once you understand that things cost money, how much you're bringing in, how much you need to go on, to live on, then you have a budget. There's different ways to structure a budget. How much budget means setting aside, deciding how much money you want to put aside for each item on the budget. How much money you want to spend on your rent. How much money. So when you decide, there's different types of expenses. There is fixed expenses, your rent, that you must have your rent, utilities, insurance, taxes, food, and clothing, and then there's extra expenditure like wants. There's needs and wants. Wants is vacation, expensive clothing, like technology, all the extra things that are not necessities. You have to have clear really what's necessity, what's and what's extras. And then just don't forget to put some money aside for savings, which we'll talk later on. It's really important. So there's different methods. There's a method of 50, 30, 20, which 50% of your income, your yearly income, because it could vary, it could go up and down, for necessities, your fixed expenses, your rent, your utilities, your insurance, taxes, food, if you pay tuition, fixed expenses that are a must. And then you could decide, let's say 30% for extras and put aside 20% for savings. That's great. And a lot of people can't control themselves, so they put literally different envelopes for different things, for taxes, for insurance, for annual expenses, some things, property tax if you don't pay with your mortgage, or different expenses. Some people pay their car insurance once a year, life insurance, different things. If you can't control, if it's all in one basket, one bank, then put envelopes. It sounds elementary, but it works for a lot of people. Put envelopes every time you have a paycheck, every time you have money coming in from your business or a paycheck, to what expenses you want to put it on.
I think that's great advice. I think one challenge a lot of people have psychologically is if you start saving money and you get good at saving, then all of a sudden your bank account starts rising and your bank account will have $5,000 and then $10,000 and $15,000. And at some point, you start thinking, hey, my bank account's got $15,000 in it. I can go spend $2,000 on a weekend getaway. What's the big deal? And then I'll still have
And then if you get a big,
$13,000.
huge expense, then, oh my gosh.
It's very easy to start justifying those expenses because, hey, my bank account's healthy all of a sudden. Whereas, like you said, if people segregate it into a different account or an envelope, it's out of sight, it's out of mind, it all of a sudden it psychologically becomes much more difficult to justify.
Right. And I want to talk a minute about why it's so important to put money aside. It's really important to put money aside. If you lose your job, God forbid, you have a slow month in your business, you lose a steady stream of income. Let's say, for example, COVID, people didn't get paid. If something goes wrong, God forbid, it's good to have emergency fund to kick in, to pay. If someone gets sick, if you have an unexpected, huge expense, like a roof of your house, for example, you don't want to just go and put on a credit card. It's dangerous. It's so important. If someone becomes, God forbid, disabled, yes, it's great to have disability insurance. It's important to have life insurance, and it's also important to have emergency fund. Some people put away savings for something more positive, to buy a home, for college, to marry off their children, whatever your goals are. It's important to put money aside for it.
What do you recommend in terms of an emergency fund size? I know some people talk about 3 months worth of expenses. Some people say 6 months. 3 to 6 months.
3 to 6 months. And to start saving when you're young. Not to wait, because it gets harder.
How young?
15, 20. I used to save when I was a kid. I saved and whatever, and then I spent it on extra. My daughter, who's 13, she wants name brands. She wants it's extra, and I'm teaching her now. I will pay for the basics. What's necessary? You want a name brand? You want to pay $20, $30? Save up money. Work on the side and save up money to buy it. If you want to take a trip to another country, you want to do something big, save up money. I love the line. Discipline is the choice between what I want now to what I want most. It's so important. Discipline, self-discipline, or discipline from others is not to buy, I want something, to go by impulse. It's to really think about it. What do I want in the long run? Do I want a bigger house? Do I want to own my own home? We could discuss that too. Or do I want to buy a new camera? I want to buy a new phone. I want to buy a new, like, whatever your toy is, a new car, a new phone, new technology, a new kitchen. Like really, do I want to buy the new toy, what I want now, or what I want most? My daughter, if she's gonna take and spend every one of her dollars on on a sweatshirt or this or that because every other person is getting it, she won't have money when she wants something else. It's all decisions. Budgeting is decision. It's not, people think, oh, budget is restrictive. I don't want to be so restrictive. I don't want to, instead of looking at it as you're limiting yourself, look at it as that you're making choices. You're making choices of where do you want to spend your money. Budget is all about choices. It's not about restricting.
I love that comment you said earlier. It's what I want now versus what I want most. Yeah, and I think that sums it up. It's really good. Yeah. I would also add to your comment earlier about the credit cards. It's much easier to save $10,000 than to pay off a $10,000 credit card bill because the interest on credit cards is insane. I mean, 20%, sometimes 25%, sometimes even higher. I mean, like you said, once you get yourself into a hole with credit cards, it's very, very difficult to get out.
Really hard. And let me warn everyone, and we all have to keep it in mind. Interest-free credit cards, they offer you interest-free for a year, for 18 months. It's great. But no, that 18 months, that 12 months, that 18 months expires. And then you're going to have to pay, and they could jump up. And read the fine lines. I ordered a credit card once that was supposed to be interest-free. And because I look at my credit card, because I have awareness, every time a credit card gets swiped, if it's me or my kids or family member, then I get a tax. If I didn't have awareness and I didn't look at the bank account, I didn't look at the credit cards, it would have built up interest. It's important, back to awareness, to look at your bank account, to look at your credit card, to know accountability for yourself, for your spouse, for your kids, who you're supporting is, if they're going to spend, like, this has to be accountability. For me, what works for me, and for what I recommend, it's depending on the family dynamics. My kids have my credit card. But if they swipe that credit card without asking me first, without me knowing first, I will lock the credit card or take it away. There has to be accountability. It has to be accountability in people in their business, in their personal finance. If in a marriage, it's so important that both spouses should know what's going on financially. They have to know it's healthy, not just to spend and spend, or to earn and not know what's going on. If God forbid something happens to one of the spouses, like if I know a family member that the husband was taking care of everything, all the finances, and then he had a stroke and he couldn't do it anymore. And then it's like the wife had to kick in. So thank God she made money, but did she know how to run the finances? No, but she had to learn. It's best to know earlier. And we talked about debt. There's good debt and there's bad debt. Good debt is a line of credit. It's a mortgage on a home. In a business, it's like a business loan that you know where the money's for. It's not just for operation, but it's for like a specific thing. You know how you're going to pay it. Bad debt, it's interest on credit cards. For example, it's so dangerous to get interest. And some people feel, oh, let's just pay off the small credit card first. I say no. Pay off the big credit card that you're paying the most interest first. If you have a hot month, when I come into a business or speak to someone about their personal finances, first of all, yes, you have to take home money to yourself or you'll feel burnt out, but to pay off credit card interest, because it's sky high and it's a slippery slope, really slippery slope.
You touched on a couple of things there. One of the things that you brought up, which was really important, is that in a family, both adults need to be aware of the finances. I keep hearing this story where, one person runs everything, and the example you brought up is, okay, that person had a stroke, unfortunately passed away, and the other person really didn't know, how to even access the bank accounts. How many credit cards do we have? How much money do we owe on this mortgage, this car payment, whatever.
I'll add it. Did the person have, God forbid something happens, did the person have life insurance? Did he have disability insurance? What savings?
All right, let's talk about insurance. Maybe give us a little bit of a high level summary of at what age, what, life cycle phase should people get what type of insurance?
Insurance is one of my things that I'm big believer in. Number one, if you have a mortgage or you don't have a mortgage, you need homeowners insurance. If you're renting, you need renters insurance, because I had a friend who I said, this is years ago, and she said she was renting. Why do I need insurance? The homeowner has insurance. My landlord has insurance. I said, God forbid, if something happens, your possessions will not be covered. Unfortunately, the house next door to her had a fire. It was an attached house, and it spread to her house, and she lost a lot of stuff. And she had to fight with the neighbor's insurance, and it was really hard, and she lost a lot of money because they didn't want to cover her personal stuff, never mind the outside structure. And then she went and got insurance, and people thought that doesn't happen twice. Why do you need insurance? Well, unfortunately, she didn't live in the best of neighborhoods, and it happened again. The next door neighbor's kid left a heater on the bed. And thank God she didn't have so much damage, but she had her own insurance. So homeowners insurance. If you're renting and there's a flood, a fire, or something, or a burglary, you want to have your stuff insured. You want to have. So that's number one, is homeowners insurance. And number two, there is health insurance. There's Obamacare, there's other insurance. Insurance, when you choosing insurance, it's important to look at the price, the premium, and what it covers. Usually, the higher the deductible, the higher the co-insurance, the cheaper the plan. You have to yes, it's risk. We don't know what the future will bring, but to look at the plan, what you think you'll need, and the different plans, what makes sense for you, the deductible, how much more you probably will be paying, how much cheaper is the plan. That's number one. There's dental insurance, there's disability insurance, which I hear lately it's really high, but it's really important because there's life insurance, which if there's term life insurance that is for set amount of years, and it's cheaper than whole life insurance. And supposedly you could take some money out, but it's much more expensive. There are pros and cons. But just to look, it's best to get life insurance as young as like 19, 20 years old. Just when you're starting out, when you're young and healthy, get 20 years, get 30 years, get something based on what your costs are, based on your, everyone's situation, how much money. Get for this, for the working spouse and for the one who stays home, who is not the main breadwinner. It's important to get. Now, they do say, and I'm not an insurance agent, but just from my 20 plus years of experience of working and helping people with insurance, when I was a CFO, this was one of my departments that I took care of, is also disability insurance. Because if, God forbid, depending on the state, how much you could get from state insurance, but if you're working for yourself and something happened and you can't work, which is much more likely than, God forbid, someone dying, you will be left with no money. So yes, you have emergency fund, but emergency fund could last 3 to 6 months. It depends. What happens if someone can't go back to work? Then what? It's if you could afford it, to get also disability insurance. And then there's also liability insurance for your business. Lost profit. I had a client who, there was a hurricane. They had no electric for a week or two. He lost 2 weeks of income and he had to pay his employees. So it's important to have, lost income insurance. Important to have liability insurance. Important to have car insurance. If, some people say to get umbrella, depending how much acid, because regular car insurance just covers to like 500,000, maybe 1 million. What happens if God forbid something, needing more? But insurance is something you don't want to use, but it's like the security if something happens. I think that's like an overall overview on insurance.
Sounds good. On terms of credit scores, tell us, what can people do to improve their credit scores?
Number one, awareness. First of all, you have to have awareness of why your credit scores and why. It's very easy to get your credit score now. Every credit card, every bank account, they all offer, you go online portal, they offer, to let you know if you're late on your credit cards, then start paying down how much debt you have to your income, what's your allowed amount to have on your credit card, what's your credit limit, how much are you using, are you paying your bills on time, are you opening and shutting new credit cards every day? That kills your credit. And credit is very important because you don't know, or if you do know, did you want to get a new car lease, buy a house? I had this the other day. I had a client who, from before I was working with him, his credit was very low. He didn't do well in business. He didn't do well in his personal financial. He had credit card debt. He wasn't paying things. He killed his credit. Then he wants to take out a line of credit. He got opportunity to upgrade, to move to a bigger house, a good deal. If you don't have good credit, either you can't get a loan in your business, in your personal, because ladies and gentlemen, business loan, do look at your personal credit. The owner, whoever's signing it, is taking responsibility, and they look at their credit. If you don't have good credit, they're afraid that you're not going to pay your loan. They're afraid you're going to default, God forbid, on your mortgage, or you won't pay your car payment, or whatever you need the credit for. If you have good credit, you could get good new credit card offers, which is good, but be careful, like we discussed with credit cards. So having good credit is really important. And if you don't have good credit, it's never too late to work on your credit. Start paying down your credit cards, start watching it, checking what is driving it. You have too many accounts. You have too many credit cards open, even though they offer you in the store. You open a credit card, you get 10% off, 20% off. Could you keep track of so many credit cards? When I get offered a credit card in store, do I want another credit card to keep track? I do suggest to have automated payments. So not to miss a credit card. It's very easy to miss a credit card payment. And then they charge you late fee and interest, and whatever you bought on the credit card costs much more. But you have to have money in the bank account to when the due date comes. Go through at least once a week minimum of what's in your bank, what is scheduled to go out.
And maybe the one final topic I'd love to touch up on is taxes. You have the ability to see taxes both from a business point of view and what kind of taxes businesses pay, and also how that impacts someone's personal taxes. Where are people leaving money on the table when it comes to taxes?
Great point. So there's a few points on taxes that I will say. Number one, if you work for yourself or you have income that they don't pull out taxes, put aside money every paycheck, every month for taxes, because if not, you get a huge tax bill at the end of the year and the money is gone. And then how are you supposed to pay it? And the IRS wants the money. They don't care if you spend it on your kids. They don't care if you spend it on your spouse, on yourself. They don't care. They just want their money. There are some strategies to save money on taxes. I will give a disclaimer. I'm not a tax accountant, but I do advise my clients on taxes. Now, in order also to save money on taxes, a lot of the things you have to do before the year end. So it's important not just to wait till January, February to really plan. When you're choosing insurance plan, if you work for yourself, there's HSA plans which help you take the medical expenses pre-tax. If you work for someone else, if they offer, and even if you work for someone, if they offer HSA plan, it's money that you're putting aside. A lot of times premiums are lower and money putting aside pre-tax for medical. If you work for someone, there's flexible spending accounts to pay unreimbursed medical and childcare up to the age of like 5, 6, or like in the summer, a day camp to pay for childcare in order to work. If you have a business and you have home employees, or like, ask your tax accountant, but like kids or people that work for you in the house, you could pay a certain amount of money. If, let's say, your kids clean your office or different things, pre-tax, they don't pay tax and you don't pay tax. If you want to put money in IRAs and all those investments, there's different ones that you could do tax-free. That's just some of the more common ones. Know what's a business expense, what's deductible, what's not deductible. Like, really, to have like a tax planning. I spoke to a colleague of mine who's a tax accountant, and he said the ones that do better is the ones that have meetings with their accountants during the year, not just at the end of the year. He said sometimes they know, really, some of them don't know what they could do to save taxes, and some of them do know, but they have to be remembered. It's like being reminded to brush your teeth, he said. I thought it was so cute. But really, there are different things to do.
I think that's good advice. Yeah, just to meet with your financial advisor, accountant, etc., on a regular basis, and to see where you're leaving money on the table, what else you can do to improve your life down the line, 5, 10, 20 years out. So fantastic advice. Ahuva Gruen, thank you very much for taking the time to speak with us today. Where can people reach you and find you?
Thank you for having me on the show. On LinkedIn, Ahuva Gruen, or on my website, which is new and improved, ahuvacfo.com. You could DM me, you could call me, you could check out what I offer on my new beautiful website.
Sounds good. I will put those links into the show notes. Ahuva, thank you very much for your time today.
Thank you.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.